Great thing.
Well, good morning, everyone. Thank you for joining us. My name is Alan Richardson. I'm the managing broker here at Maximum Realty and Realtor Partners.
My name is Ming Richardson, the compliance broker for Maximum One Realty and Realtor Partners.
And this is our weekly real estate backstory. We kind of go over all the comings and goings, the things happening in the real estate world, kind of keep you up to speed. So we appreciate you joining us. We want to kind of jump right into what's going on with the big lawsuits kind of going on. And so, previously, Anywhere, which encompasses a lot of different, formerly known as Realty, they have a lot of the big national brokerages underneath their umbrella. And so they settled the big lawsuit a couple of weeks ago. And then last week, Remax settled the big lawsuit. And we just kind of wanted to talk about it for a quick moment because like there's some reasons why this lawsuit isn't in Georgia.
Well, given the premise, because now everybody understands.
Okay, let's talk about that's a good point. So the whole premise of this lawsuit is that sellers were forced to offer buyer compensation, and see, that's where the real rub comes. And so for a lot of the US and for several areas in the US, and as well as some brokerage firms and some and certain MLSs, as well as NAR, they stated in their rules and regulations that you must offer a buyer side compensation. It has to be offered.
So basically it's a company policy. So it was endorsed.
And an NAR policy at one point.
Correct.
Yeah.
And so because an endorsement and the must have compensation to the buyer broker, that's where they got in trouble.
But see, here in Georgia, we don't have that. And I don't think it's smart, but a seller can offer no buyer's agent compensation at all. And so everyone in the industry nationwide is kind of going a little bit nutty. Remax just settled for $55 million. And I have a very probably unpopular opinion about this. And I think that NAR is going to lose because the way that the rules were written at the time. Now, by the way, all these rules have changed now. And so,
they're suing for a specific time when the rules was in place. So what happened was NAR had put them in place, and other large brokerages follow suit and follow that policy.
As well as the big MLSs. So
correct.
I do predict that they will probably lose. And that, again, opinions like armpits, everybody's got one. This is mine. But if you look at the rules, it was not, the way that it's written in there. You could not, a seller was not given the ability in those states during that time frame
correct.
to be able to not offer a buyer's compensation. And so, and here in Georgia, we don't have that. I don't see any kind of real big changes coming here in the way that we do business, but we do need to be able to explain kind of what's going on. We will have consumers talking to us. As usual, we will have a lot of folks talking about like our commissions negotiable? Well, yeah, they are negotiable. Well, do we have to validate how much we're worth? Do we have to have a value statement and be able to speak about, these are the services I offer, these are the fees I charge. And that's really what we need to be able to talk about. And yes, a lot of seller compensation, I do believe that it is essential for us to have buyer agent compensation as part of the listing agreement.
Well, if you look at it, it is a consumer market. So, it is actually better for a buyer to have representation.
Yeah.
And when the buyer is already knee deep with the interest rate and costs, it's hard for them to even come up with any more. So when seller offer no co-op, what happened is the buyer's agent will basically send an offer in prior to sending an offer in and say, seller, you will pay my co-op before we move forward. So, by eliminating the co-op, the seller's not doing themselves justice because the buyer's agent's going to ask the same thing.
Well, and the buyers need to have this wrapped up into their financing. A lot of them don't have, they're already having to come up with really high down payments. Now we've got more pressure on interest rates. And then all the ancillary services, inspections, fees for this, fees for that kind of stuff, that a lot of our buyers just don't have the ability to do that. They need that financing loan. So anyway, just wanted to kind of bring you guys up to speed on that. I don't see a huge change coming for it right there, but we do need to be knowledgeable about what's happening in the marketplace. when it
And
comes
that's
to that.
where the MLS are adopting now.
Mhm.
If you see on the listing, public can see what a co-op commission is.
Yep.
So it's very transparent. There's no more hidden agenda. And agents, please note, do not put zero commission on your buyer brokerage agreement. Because if you do that, then you're basically saying you're working for free.
Yep.
Okay, and don't be upset if the seller refuses to co-op. So therefore, I understand this is your business. I also understand that our
Mhm.
time is valuable and we're not here to do a service for nothing because we still have our four walls
Right.
of support in our families.
But if our buyers say, listen, you don't like don't show me properties that don't have any commission because I can't bring it out of pocket,
Correct.
then we
Absolutely.
Yep. All right, moving on. I want to talk about MV Realty. And so MV Realty is, if that didn't ring a bell, MV Realty, these are, in my humble opinion, a little bit shady business where they go in and they
Oh,
offer homeowners cash in exchange for a 40-year listing agreement. So they have a listing agreement that lasts 40 years, and so they have the right to list that property. And to get out of it is really, they're making between $300 and $3,000 on average. They give, and they target at-risk home sellers, people that are
the stress
Yeah.
or uninformed seller of what their market value is.
So a lot of states, they're like here in Georgia, the state attorney general is kind of going after them. Florida, Ohio, Massachusetts,
Mhm.
North Carolina, and so they say they're being innovative. Everyone else feels like they're being kind of shady. In my opinion, that's okay, but they're going through. They're
40
filing
year
chapter.
is a long time.
Yeah, and well, the whole thing is they were just targeting people that were in harsh financial situations, and when they actually did liquidate their property, they were going to get a very large commission check at the end of that.
Correct.
And so now they're having to file bankruptcy because they're getting their butt sued off everywhere. So just kind of keeping you up to speed about things going on in the industry here, kind of thing.
I believe in innovation, but not taking advantage of the
Yeah,
general public.
especially not the ones that are greatest in need.
Absolutely.
All right. Now for all my Georgia MLS folks, and I believe it's going to be kicking in FMLS too. There's Supra eKey changes starting 2 days from now. So starting on the 27th at 5, all Georgia MLS Supra eKey basic users will automatically get kicked over into a upgraded professional account. And so, they have added some new additional fees or additional services, but they've also added an extra $1 a month kind of thing. So it's not like it's a huge expense, but still it's another $1. Now you will be able to view and search MLS listings and agent roster when you're offline. It has real-time property notices. And one thing it does have is the new map feature and turn-by-turn directions. That should be kind of nice to kind of add into there. But just so you know, if you see some changes coming on, if your Super key looks differently, and if you notice there's some new bells and whistles, and then, your bill goes up, that's why kind of thing. Now, NAR just released the best time to buy report. And in here, they, and what they've done is they went in and analyzed the market, and they did, nationwide, and said, there's a week coming up, and here in Georgia, it's October 8th to the 14th. That week is the single best week to buy a home in Georgia. And during that time, there's 11% more active listings than the average week. And then there's also almost 20% more than the beginning of the year. And then there's about 20% less competition than what we had during the summer. So we had, on average, it generally accounts to a savings for buyers of about $15,000. And so that day is coming up, or that week, sorry, is coming up October 8th to the 14th. Now, you might be saying, Alan, right? It's September. But listen, your buyers aren't buying, like they're not going to go out and buy tomorrow, right? You got to start talking to your buyers right now, letting them know about what's kind of going on with the marketplace. We are seeing, and I'll show you some where inventory is upticking a little bit, and that's such great news for us. But now's the time to be talking to your prospective buyers about buying a home. that week is going to, like, the whole month of October is actually a really good month to buy. It favors buyers more so because we have more competition. I'm sorry, we have less competition and we have more inventory during the month of October than any other time of the year.
Honestly, the October, late September, early October kick off the holiday season. So that's why you have less competition. And, and also you have leftover inventory from the summer where the seller is motivated at this point to sell.
Well, but we also have, come November, December, we have less sellers that put their property on the market. And so, and that's why this September, October time frame is so good for us, is because
for the buyer.
I mean, for the buyers, right? And honestly, the buyers are the ones that need the most help right now. I mean, it still is a seller's market. We're still seeing property values increase, especially for our first-time buyers. They need every advantage they can get right now.
Absolutely.
And so, we need to be able to talk, and we need to be able to be knowledgeable and talk to our folks about, hey, this is coming up. Now's going to be a really good time. We should really be looking to try and get something under contract in October. But in order to have those transactions hit in October, you got to start reaching out, engaging, sending property listings, those kind of things to your clients now.
Correct.
All right. So there was a poll by Redfin out there, and they said, how do you feel about when the government trying to build more affordable housing? And everyone is basically for affordable housing. What they don't want is apartments. And see, there's a difference in how, especially the government, when the government talks affordable housing, they're talking apartments, and that's really great for investors. But see, wealth is tied up in home ownership, and a lot of Americans really know that, because even though the vast majority, over 80% of folks feel that affordable housing is important, most people don't want an apartment complex next to them. But they also know that that's not where wealth comes from. Wealth comes from actually owning the home, not from living in apartments. So cheap apartments, while that can get you through, like what we don't want to do is create an entire generation or mindset that only the wealthy own homes. Everyone should own a home, and that's a big thing. And so be very careful when you see the government talking about affordable housing, and what are they really talking about? Because most of the time it's grants to build more apartments, it's low interest loans to build more apartments. It's all about apartments.
Correct.
And that helps our investors out. And I'm not knocking them being investor, we're investors, but by the same token, the big kick here is it's still about home ownership. Now, for our homeowners, they're predicting a really big jump in homeowners insurance in certain, but because insurance companies are data companies, right? They know where it's really where you have a greater chance of issues and things like that. And so places that have hurricanes, a lot of tornadoes, fires, floods, yada yada yada. There's a pretty extensive list. But see, in most of Georgia, that's not us, right? And so especially in the Atlanta metro area, it's actually really low. And overall, it's in that 4 to 7% range of what properties are at risk for corrections. But the insurance company coming out, there's been some changes in legislation and things like that. And some homeowners will see their homeowners insurance jump up drastically. That's why you're seeing folks in Florida. There's a lot of homes in Florida now that don't carry homeowners insurance because it's so stinking expensive. And all around the coast, even South Georgia, generally speaking, you're going to see the insurance rates in South Georgia are going to be spiking up. So for those folks that have properties in South Georgia, and for our friends in South Georgia, I hate it for you, but you need to be informing your clients that they need to start shopping around, looking around, and being very proactive. If you just, if you're like us, a lot of times we just renew. We don't even really normally think about it that much.
Right.
And for some folks, it's not that they don't hardly even see it. Some of it's just paid as part of their
escrow.
And so they have no idea what it is. The time is now to be talking to your clients about, hey, shop your homeowner's insurance, because there's a good chance, and no, hopefully not in the Atlanta area, but in a lot of parts of the country, homeowners insurances are going to be going up astronomically right now.
I just had an investor who bought a property in Florida. He's like, my insurance quote was $8,000 a year. I'm like, well, you're by the Florida tornado, hurricane.
Yeah, enjoy that beach. So it's
Yeah,
going to cost you. Yeah.
yeah.
All right. So the Fed met last week, and on the good news was they didn't raise the federal funds rate. However, they also said we're not going to stop raising. They're still predicting another increase before the end of the year, which in turn made the markets kind of lose their mind and go, just kind of freak out. And so we didn't see any movement last week in mortgage rates at all. I mean, they were literally flat last week. So, it's a skip, not a stop. We're still not seeing much relief when it comes to interest rates, even though we're seeing more signs of inflation. The job market's still really strong, things like that. And until they start lowering rates a little bit, we're going to keep feeling the pain. Now, just because they didn't raise the federal funds rate, that like 30-year mortgages and the federal funds rate are not directly connected. But when the federal funds rate is adjusted, that makes the bonds market go haywire. And that's what, the 10-year treasury is what influences the 30-year mortgage market.
And I think honestly, the buyer are getting adjusted to the new norm on the interest rate. Mortgage application actually went up a little bit.
Yep,
but
they're up
by
2%.
much.
Yeah.
So, but the buyers still need places to go. And so now they understand, we're never probably ever going to see, never say never, I guess, a 3% interest rate or
We don't see it.
lower. But that's
Well, now we have folks who are considering 8s, like
Mhm.
it's 8 the new normal, that kind of stuff. And so we went from last year, a lot of folks saying, all right, it's 6.5. Let's wait for it to get to 5.5. And now it's 7. Are we going to 8? And so folks are getting like that's becoming the new norm. We also have to be ready for this is our reality. We can't just sit and hope and like, oh, I really want rates to be back at 5.5. Well, they're not there right now. So we need to be conscious about what's going on and understand that still, even with high interest rates, guess what folks want to do?
They still got a place to live.
They still want to own homes. Yeah, exactly. And not just apartments.
Right.
So, all right. Now one entity that is really feeling that is when it comes to housing starts and mortgage rates. You can see that as mortgage rates have gone up, housing starts overall has gone down. And that is part of the reason why we're having such inventory challenges right now. Yeah, I mean, like it's really, really like we
because
just don't have enough
knows
inventory.
they can't build it and be affordable where the average person can move in.
Right. And so there is some sort of a correlation between interest rates and as well as availability. But really our availability is one of the things that's driving, we just don't have enough houses to sell. And so this is troubling. But part of that comes to, the North American Home Builder Association and Wells Fargo. They do this builder confidence about, how good do you feel about the market? And they're not feeling good. Matter of fact, it dropped below 50%, which is one of their negative things.
If you look at it, their projection prospective buyer traffic is much lower, actually around about 29%, where their confidence is almost 45%. And the present condition, even though it's better than confidence, but the fact is that they have to project in long term. If not, they go, experience the same thing back in 07, 08 when the housing, market basically.
But see, that's their feeling.
Right, that's the feeling.
And what we actually see is that right now, they have started putting out more permits. Now their starts and completions are down, but their permits are up. And so you can see here that this is starts, completions as well as permits, and so they're permitting more, which is good. They just haven't started them yet.
Correct. And remember, new construction have up to 2 years
to
complete.
Yeah, but what we are seeing is that new home sales are continuing to increase exponentially. Right? We saw that big blip that everyone saw back in that post-COVID blip that everyone saw, but now new construction sales are still trending up, even though total sales are down. Like if you were to put total sales, number of sales versus number of sales for builders. Builders are taking up a bigger piece of the pie right now. And so we've got to make sure that we're really ready to kind of work with our builders and be talking to your clients, because that's one of our few places where we do have some decent standing inventory. Now, one thing that we are seeing is that new pending sales are actually trending up. We're still below last year. I'm not trying to say that we're not below last year. We are. However, you can see that the trend line is actually positive, right? We're moving in the right direction here overall. Now, at the same time, we're seeing where our buyers are being very selective. And right now, the percentage of properties that are taking a price reduction is actually pretty high right now. Okay, it is sitting at 36%. Basically, a little over a third of all properties on the market have taken at least one price reduction. And so this is one of those where, the days of the seller, like, I'm just gonna put this out here at this price, they can take it or leave it. Well, they're leaving it. And so the sellers who are not being realistic about price, if we're not pulling good comparable sales and being able to show that what buyers are willing to spend in this market and talk about price versus condition with our sellers, we're seeing right now that last year was worse, but this year is not trending great, right? We have a lot of properties that are seeing price reduction, even though inventory is so crazy tight. So we're still seeing values increase. We're not seeing any risk of that right now. Matter of fact, Lawrence Yun, who's the lead economist with NAR, he said, we would have to double inventory levels, double them, just to be able to see property values drop, kind of thing. And so we're still seeing, the number of offers received per sale. It is trending up a little bit, but it's still down from where it has been, especially, post-COVID, that kind of stuff. But we are trending in the right direction. And so there is still a lot of activity out there. But if you're overpriced, and that doesn't fix anything out there. So what we're seeing is the number of properties sold above list price is actually declining right now.
Correct.
So, the days of let's put it out here and then let's people fight over it, they're not fighting.
No.
No.
They're not. And, the savvy buyers are looking at the overall condition of property. So, especially home with deferred maintenance or outdated, they're not as desirable. And the buyer will wait until the next inventory come around before they make that offer.
Yeah. Now, overall, property values are increasing. You can see that this is overall our property values in the Atlanta region. And, property values are continuing to climb and increase on there. As a matter of fact, Zilla just released their forecast for 2024, and they're looking at a 4.9% property value increase nationwide in 2024. And we see that as being a very healthy number. Like property values over the last 50 years have been about 4.5%. So we're moving into the range of normal, reasonable,
Correct.
which is a very healthy place for us to be, and we really like that. Now, at the same time, we are seeing a slight uptick in new listings in the Atlanta area. Not massive, but we're still under last year, but we want to see more of these new listings moving in. We really need that. And so you can see that overall, still, our inventory is ridiculously low. We have never had an inventory level this low, and we continue to grow in population. More people are moving into Georgia and into Atlanta area, and we have less homes to offer them. And so that's being really, really challenging. Now, at the same time, we're seeing months of supply, and this is where supply versus demand meets up. So we're actually seeing a slight uptick in months of supply available on the market. We're sitting a little over 3 months. Now, we still need 6 months, and that's what we're talking about with Lawrence Young. He said, we need 6 months to have a balanced market. We're only sitting at 3 months of standing inventory, right? And all that kind of rolls up here. And so there was some recent information I want to kind of share with you guys. And so overall, you can see that in the Atlanta area, we're one of the metros with the highest decline in sales. First of all, in sales. Okay. Now, which is not good, but at the same time, we're also one of those places that have one of the highest declines in new listings. So yes, I know interest rates are a big deal. Yes, I don't like where interest rates are right now. However, what you can see here is that it's not just about interest rates, because interest rates are nationwide. Those are the interest rates that they are. What our biggest challenge is inventory. We don't have enough homes to sell, and it's kicking in. It's really hitting us hard in our pending sales because we don't have the inventory. So taking advantage of new construction, anything we can do to get more listings on the market, we need more inventory out there right now.
Absolutely.
Now, changing gears again. So flipping is down. So overall, the overall percentage of flipping homes, there was a big push, just like, throughout most of the market, post COVID, that kind of stuff. But flipping is down. It's down pretty significantly. Now, what would cause flipping sales to be down? I wonder. How about if you're not making much money? And so like right now, the home flipping profit trends are the lowest pretty much it's ever been. So it's hitting some of the worst returns on investment, and it's costing, we have a lot of flippers kind of, it's costing them a lot of money.
Their money, basically.
Well, I'm not saying they're losing money, but they're definitely not making as much as they had been.
Well, if you look at gross profit, even though some of gross profit are high, but if you look at a gross return on investment, the return margin has been very minimal versus what it used to be.
They still got to pay taxes though.
Correct.
So all that's kicking out. Now, for your flippers out there, another number I kind of wanted to share with you really quick is the average days to from the day you acquire a property to the day you sell it after you repair it, all that is 178
days.
Rough, almost 6 months. And so when folks say, I'm thinking about flipping, I'd love to flip a house. How long do you think that'll be? 6 months. The average nationwide is it takes about 6 months to go from acquisition to disposition.
And that's because renovation and supply, even though we have gotten to some type of norm supply, but the problem is supply chain in some area is still sluggish.
Yeah.
So, don't think you can have someone bid for you and they project 2 months to finish. I can tell you add another month or two on top of that.
Yeah. Now, one area where we are seeing softness in the real estate market is in office property, in the commercial side of real estate, in office. And office is really feeling it right now. And especially what we're seeing is property values in office are really starting to drop. And so overall, they're down about 14%, which is pretty significant. Seeing as how it's more than it was back in the 2006, 2007.
Correct.
When we had the market correction in 2006, 2007, office has had a bigger price reduction now than they had back during those times. And
Correct.
So now office is also a different market, right? With the number of folks that work from home and that kind of stuff, that, the office market is very, very much in turmoil, but that's also an opportunity for certain people, right? We have a lot of other investors that are looking to take advantage of things, and not in a negative way, but more like this is a place where you can get some really good values out there. Is in commercial real estate and office properties. Now, there's also a trend right now in anchored retail, hospitality, and multifamily. All these are trending downward. Understand that residential real estate and commercial real estate, while still being real estate, are not driven by the exact same factors. Residential real estate is driven by supply versus demand.
Correct.
The commercial is much more driven by the job market, by the economy. Those kind of things are really going to affect that
and all that stuff.
That's going to be much more a much greater influence on commercial. So just if you see these commercial numbers, understand that they don't carry over and equate into the residential market. The residential market will feel a recession, but it won't feel it the exact same way because it's still going to be about supply versus demand, whereas commercial will absolutely feel it. Now, if you need your Max One swag, hit Max One Market Up. Tomorrow, we've got remodels, rehabs, and new construction, how not to get ripped off, and that's going to be over in our airport office. Also, I'll be teaching real estate marketing and technology secrets up in North Forsyth in the coming office. And then on Thursday, we have Matrix Basics. So please catch those in our Noonan office over on Thursday. So we hope that you guys have a great week. If we can be of any kind of service, or if you need anything, please call, text, smoke signals. We appreciate y'all. Love you.
Thank you. Have a great day.
Bye-bye.